Greetings. Thanks for joining us once again. The focus of our talk today is the increasing oil prices result in higher inflation, which impacts the Fed's decision making on what interest rates are going to be, and therefore starts to affect the market's strength, is our focus for today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, like some better ideas on investing and trading, please take time to join us. So, we're trying the outdoor action once again. Hope it's working. I wanted to do a quick show today, concentrating on the fact that we have a big problem that's lurking for the NASDAQ and for the market in general. And so as you notice, we're closing on $90 a barrel for oil. We were as low as $61 a barrel a couple of months ago. And hopefully now that the summer driving season is ending, we'll see less demand for oil and therefore possibly declining prices. But given that the Saudis have decided to cut production along with the Russians and others as a way to boost price, I don't know that we're going to see much lower prices in the near term. Perhaps when we get towards winter, we might see better numbers. So what I wanted to concentrate on today is just the fact that it's really important, if you're an investor, to sort of identify some of the large threats that maybe loom for the economy. So as we look at Tesla and its issues, one of the things Elon has been battling is trying to adjust prices as a way to address the impact of the interest rates on the vehicles being sold. So it seems to me that he's been tempering those prices as a way to manage the number of folks that step away from car purchases based on how high the interest rates are. So as a result, Tesla's price of vehicles have been declining. I do believe one of the challenges this sets up for the company is that beyond what's going on with the Cybertruck, we still have the headwinds that have been affecting the stock price as we've gone through the last two rounds of earnings, which is basically we have increased revenue or increased number of vehicles sold. Revenue is on the uptick, but the margins are kind of on the downtick, particularly on vehicles not named Cybertruck. So as a result, I believe we're in a sort of a tough spot right now for the stock, and that is somewhat the same spot that the NASDAQ is having, perhaps more so than the rest of the larger economy. So basically, we went from, let's call it a $70 oil price and the Fed viewpoint from there to now a $90 price point and the Fed's viewpoint from that area. The big concern I see is just the fact that if you're worried about inflation and oil represents 2% of everything being sold by anybody, you now have this problem where it's actually higher inflation driven by oil. Then you have all these sort of loony things that are attached to that. For example, your inclination of the Fed is to try to find a way to have people spending less money. Well, when oil prices rise, your cost of getting to work is more expensive, and you're spending more money to get to work, but you don't have a way to lower that expenditure because you still need to get to work and the number of miles is still the same. So this creates, I think, a very difficult environment for the consumers, which is, I guess you can't go out to dinner if your dinner budget is going to your gas tank, for example. But nonetheless, the big problem that I see going on is one can justify the fact that you can say inflation is coming in, we need to raise interest rates because the price of oil is driving overall inflation higher. So I believe that we're in the zone right now where the data is not necessarily conflicting, but the data is, I think, a little bit off because we basically have all these folks who are buying less, but any buying they're doing forces prices up. And so I think it creates a nightmare. We can trace how these prices work to a lot of places. For example, if you have groceries and those trucks have to bring the food to the grocery store, they're running on oil or gas. Well, once they get to that grocery store, they have to charge X amount more in that process because it just costs them more to deliver those groceries. So those companies they're running on 2% margins, so perhaps they'll take a little bit of a hit in margin in order to keep prices the same, but in general they're going to have to hand those prices off to consumers. So whether you go into a restaurant or you go into the grocery store, you're seeing higher prices, and it seems like you're buying more, but again, you're buying less. So overall, what does this, I think this means for what we're going to see over the next few weeks? I believe what it puts us in is a very nervous environment for the markets and consumers relative to how all this is going to affect what the Fed's behavior might be. So as a result, I don't expect us in the next couple of 3 weeks to see a sideways or up or down. It's more of a sideways rather than up or down. If anything, I expect a fairly severe downdraft driven by how all this data is playing out. Now, as I said, I think that the Tesla impact is perhaps even lower prices from Tesla, but again, revenue seems solid. It's declining profit that's a concern, and it's nice to see the stock holding up in the 250s when a lot of the other companies, including NVIDIA is one of the focus companies that I have, are getting smashed in the process because of how all this is working out. So, I guess the one group that can take advantage of this is for those who are benefiting from the higher interest rates, i.e. bondholders, et cetera. This might be the time to load up on the bonds in the short term prior to the Fed deciding to hold rates or lower them in the future. Those that have stuck it out with the bonds seem to be doing pretty well. At any rate, wanted to thank you for joining us on this. We're hoping for the best, but I think you understand why we're kind of in the worst case scenario right now. Had a meeting with a kidney doc yesterday, and his comments, a liver doc, different from the kidney doc we've had on our list previously. And we were kind of talking, he sort of gave me a rundown in the alcohol space, recommending that we drink no more than one glass of alcohol a day, the goal being to avoid something called fatty liver. So I don't know if you know about this, but it might be, if you're a heavy drinker, you might want to consider this because of the long-term health implications. So he suggested maintaining a healthy eating and exercise lifestyle combined with moderate drinking is not a problem, but to drink too much, you end up with potentially some major issues. Anyway, we wanted to thank you once again for joining us. Don't forget your 25 leg lifts and 20 minutes of walking daily. This is Greg for Teslafaninsight. Tschüss, au revoir, hate road, hoda hafez, drajije, ni hao ma, konbanwa, and heido, namaste. And in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a good day, and bye for now.